Dear students, in this video we are analyzing the journal entries so we can understand which item to debit and which item to credit. Here let's start with the question number 1 of your question bank which I have sent. In that, J. Seeley is a sole proprietor having a provision store. Following are the transactions during January 2023. Journalize them. So the first transaction says commence business with cash. So when the business is being started with the help of a cash, that means that here the proprietor JSCV is starting her business by investing cash of rupees 80,000. So the two accounts which are being hit here are, one is capital account, other one is cash account. Capital because she is starting a business, and that is to with the by investing cash. So here cash is increasing in a business, capital also increasing in the business. So now you decide what to debit, what to credit. Next, deposited cash with bank. Here two items, one is cash, another one is bank. Cash is an asset, bank is also an asset. So here when the cash which you had in your hand is being deposited into a bank, cash in your hand is reducing, whereas the cash in the bank is increasing. So what should be debited and what should be credited? You have to record that. Next, purchase goods by paying cash. Here goods are being purchased, business goods are being purchased. Okay, so when purchases takes place, it's an expense item. We are spending the money to buy the goods. So here cash in your hand is reducing, expenses are increasing. Here two accounts being hit are purchase account and the cash account. Purchases are increasing and your cash is reducing in your hand. Next, purchase goods from Lipton and Company on credit for 10,000. So here goods are being purchased from a Lipton and Company on credit. So here it's not on cash, hence we cannot take the cash account. Okay, one is purchase account because we are purchasing the goods, and the other one is the artificial person, that is Lipton and Company. The organization name or the individual person name, whatever they specify, if we have purchased the goods on credit or sold the goods on credit, that time we have to take the name of that artificial person or the natural person, not the cash. Okay, so here two items are, one is purchase account, other one is Lipton and Company. So what should be debited and what should be credited? When you are purchasing, purchases are increasing, that means your expenses are increasing. Along with that, here Lipton and Company is your creditor. Creditor means it's a liability, so your liability is also increasing. Liability means you have to pay this company the amount of 10,000 in future. Okay, that is your liability, that is short term liability, actually current liability we say. So that creditor is increasing means your liability is increasing. So next is sold goods to Joy and received cash rupees 11,000. Here the sales of goods, business goods are done and cash is received. So cash is increasing here. Sales, that is your revenue item, sales is your revenue item, revenue is also increasing. Next, paid salaries by cash. Salary is paid by cash. So salary is an expense and cash is your asset. Here cash is reducing, your asset is reducing, salary, your expense, salary account is increasing. So you think what to be debited and what to be credited. Next, paid Lipton and Company by check for the purchase made on 4th January. See here from Lipton and Company goods were purchased worth rupees 10,000. Now out of the 10,000, the whole 10,000 amount has been paid back to Lipton and Company. That means that is to by check. Okay, by check it is paid, means not through cash. Okay, by check means it is bank account. In your bank account amount is reducing and your creditor Lipton and Company, your creditors also reducing, your liability also reducing. It means decreasing. Your your bank account amount is also decreasing. So here you decide what to be debited and what to be credited. Next, bought furniture by cash. Here direct furniture has been purchased, that means your asset is increasing and your cash in your hand is decreasing. Next, paid electricity charges by cash. So here electricity is paid, electricity payment is a expense, and by paying in cash, again it cash in your hand is reducing. So electricity charges paid by cash are hitting two items. One is your expenses account, that is electricity charges account, and your cash account. So next is bank paid insurance premium on furniture as per the standing instruction. The standing instruction means that when we give an instruction to bank to pay a money of insurance premium on behalf of us, when we are busy and we can't, we think that we forget or something will happen, we give instruction to the bank that on this particular date of this much of amount, please pay the premium insurance premium to this particular insurance company for this asset or something on behalf of me. That is what we call it as a standing instruction given by us to the bank. So here bank has done the transaction as per our instruction. So whatever here bank is paying from the bank account of us, okay, for to whom, to insure on to a insurance company as a insurance premium, so insurance premium here is an expense, and two accounts here comes are, one is insurance premium account, another one is bank account. Bank account amount is reducing, insurance premium, your expenses are increasing, that is 300 rupees. So here you decide on what to be debited and what to be credited. So that is about the question 1. Here the question 2. Anant is a trader dealing in textiles. So here we have to remember that he is dealing in a textiles trader. He is a trader. Okay, trader means he is buying and selling the goods. Purchase and sales are taking place here. He is not manufacturing the goods. For the following transaction, pass the journal entries for January 2023. So first one is that he commenced the business with cash rupees 70,000. It is same that he is starting a business. So one is a capital account, other one is cash account. Cash is being increased in the business and capital is also being increased in the business. So you have to debit one item, credit one item. The two accounts here are capital account and the cash account. Which one you debit, which one you credit, you think based on the modern rules of accounting. Next, purchase goods from X and company on credit. So here goods are being purchased on credit from X and company. X and company here, they are our creditors. Creditors means they have given us a goods on credit basis. We still have not paid the amount to them, so we will pay it in future. We don't know when, but we will pay it in future. That's why they are our creditors. Creditors here are increasing, that means our liability is increasing when we are buying the goods. So when the liability is increasing, what we will do, that as per the modern accounting rule, you think and record the transaction for purchase account and X and company account. Next, cash deposited into bank. Cash is being deposited into bank. So cash in your hand is reducing and the cash in the bank is increasing. That two cash account and the bank account both are assets account. You think of that. Next, bought a building from L and company on credit. So here again the creditors are increasing because a building has been purchased on a credit. Okay, so here liability is increasing and your building, that is building is an asset, your fund asset is also increasing. The two accounts here are building account and the L and company account. Which to be debited and which to be credited, you think. Next, cash withdrawn from bank for office use. So here cash is withdrawn from the bank. So cash in the bank is reducing and cash in hand is increasing for office use, not for personal use. Okay, if it is for personal use, that it could be drawings, but here they have specified it is for office use, hence it is a cash account and a bank account. Next is cash is withdrawn from the bank for the personal use of Anantu. Here they are saying that the trader Anantu has withdrawn the money from the bank for his personal use. That means that cash is reducing, I mean in the bank amount is reducing and drawings are increasing. So two accounts here are, one is bank account, another one is drawings account, not cash account. Okay, so don't need to go with a cash here. You have to specify bank account where the amount is reducing in your bank account, and another is because of these drawings made by Anantu, drawings are increasing. So here one is bank account, other one is drawings account. Next, towels are given to charities. So he see here, he is buying the items, he has purchased the goods of the 30,000 rupees, right? His activity is that buy it and sell it in the market. That is what a trader does. So here towels are given to charities. Instead of selling that, what he has done is he has given it on charities. Hence here what happens is, one is charity account, yes, because that is an expense, yes, but which account we have to uh, credit here, I mean which account we have to uh, reduce the amount, credit here is purchase account. Why purchase account? See, here what is happening is, we purchase the goods worth rupees 30,000. Okay, now out of the 30,000 worth of goods, 3,000 worth of goods he has given it in charity. And in the second, in the next thing, the next sentence they are saying, shirts taken over by Anand for personal use worth rupees 12,000. Out of that 30,000, he gave 3,000 worth of goods on charity, that is towels, and next shirts of 12,000 worth he took it for his personal use, that is drawings, and next sarees distributed worth of 3,000 as a free samples. So next, goods tablecloths used for office use 200. So what has happened is, why I am specifying here, why all these items should be credited to purchase account, why not to a sales account or anything, because sales is an item which gives a revenue to us, but here the goods, okay, what the goods he has purchased, business goods worth rupees 30,000, out of that he has given 3,000 to charity, 12,000 he took it for his personal use on drawings basis, next 3,000 worth as a free samples, and 200 for office use. The total of all these items, he did not generate any revenue, but he did something else out of the purchase he did. So when actually we are showing it in our lectures, we have to deduct all these items from the purchases we made, hence we have to hit it in a we have to record it in a purchase account. So here you can see towels are given to charities 3,000 rupees. Here the entry should be charities account debtors to purchase account. Okay, shirts taken over by Anand for personal use, that should be drawings account debtors to purchase account. Next, sarees distributed as free samples of rupees 3,000. Here again it should be selling and distribution, or what you can say a promotion, advertising and promotion account, debtors to 3,000, I mean debtors to purchase account. Okay, next, goods used for office use, that is like you say office expenses account debtors to purchase account, like that we can say. So here why are we ultimately, whatever the debit item is, charities, drawings, advertising and promotional, or office use expenses or anything, office expenses account or anything, ultimately we are crediting the item to purchase account. Purchase account, I am specifying here, it should be credited to purchase account. Why? Because we have to deduct that item from the purchase account in the ledger. Okay, not in a sales account. Sales is a revenue generating item, so that's a wrong thing here. So we are crediting that into a purchase account. Next, here in the question number 3, Chandran is a sole trader dealing in sports item from the following transaction past journal entries for March 2023. One is commenced business with cash rupees 4 lakh. So here you are clear now. He has started a business with rupees 4 lakh rupees of cash. So two accounts here is, one is capital account, other one is cash account. The other next one, cash deposited into bank. Hence here one is cash account, other one is bank account. The third one, purchases goods from Ravi and payment made through net banking. So here goods are being purchased from Ravi and payment is made, means they have already paid. So we don't need to take the name, okay, name here. So purchases account debtors to what? Bank account. Why bank account here? Because the amount is done, amount is paid using a net banking. Net banking is a form of banking, right? So amount is paid, so bank account. Next is sales were made to Kumar, who deposited the money through CDM. CDM here means cash deposit machine. So the goods which we sold to Kumar, he has already paid the money, but not in the form of cash. He paid it by depositing that money in a cash deposit money. So CDM is a form of banking again. So here we say that bank account debtors to sales account, because we did the sales, we generated the revenue, we are crediting that, but what is increasing? Cash amount in our bank is increasing because he deposited the money, he paid the money to us by depositing that into a cash deposit money. Okay, next, sales made to Vivek, who made the payment by debit card. See, we sold goods to Vivek and he also paid the money to us by using a debit card. Again here debit card is a form of bank item, so here bank account debtors to sales account. Next, sold goods to Kirtana, who made the payment through a credit card. Again credit card is also a banking item. Credit card doesn't mean here that she has taken the she has purchased the goods on credit basis. When she used a credit card also, the amount is being paid to us. Okay, so we have received our amount here. The transaction will be same, bank account debtors, bank account debtors to sales account. Next, dividend directly received by the bank. Dividend received is a income to the business. Okay, and in the bank money is increasing. There are two accounts, dividend account and the bank account. Bank account debtors to dividend account. Okay, next, money withdrawn from ATM. ATM money has been withdrawn from ATM. That means that in our bank, in our business account, bank account, amount is reducing because we withdraw the money, cash from the ATM. There are two things here. One is cash account, other one is bank account. Okay, next is salaries paid through ECS. ECS is electronic clearing services. So that is also again a form of banking thing, where the amount is, when we have to pay someone the amount, banking does that kind of activities. Okay, that is banking activities. So when we are paying a salary, that is an expenses, and electronic clearing services is done by the bank. Hence the amount in the bank account of our business is reducing, salaries paid, expenses are increasing. Hence here the transaction is salaries account debtors to bank account. Next, cricket bats were donated to a trust of rupees 10,000. It is again same. He is a trader here, sole trader dealing in sports item. He is buying and selling. That means that we have to show it in a purchase account. Purchase account. He has purchased the goods, okay, from which he has donated the goods, that is sports item, donated to a trust worth rupees 10,000, that we have to credit. Donation account debtors to purchase account. 10,000 should be credited here. So you remember that trader does a business of buying and selling, not manufacturing. Okay, hence here it is very much important that we should reduce that. If we are donating it, or we are using goods for our personal use, or we are using that goods for office use, or we are doing charities, or we are using for the advertising or promotional activities, for anything, if you are using that goods which we had purchased in a trading business, that means that we have to show it in a purchase account only. That's why I have made this video specially to explain these items. Charities of problem 2 and problem 3, 12 charities, personal use made by Anand, and sales free samples, office use items, and here donation of cricket bats. All these items has to be shown, I mean credited in a purchase account. Okay, so don't forget this. Next, fourth question and the remaining I will explain in the next short video.